We're going to continue on with the Digget Shovels case, which again can be found, the actual case can be found at the bottom of this video link. We're now going to focus on perpetual LIFO. And what did the journal entries in the income statement look like under perpetual LIFO? So again, we have sale number one. We sold 70 units at $40 a piece. So our sales, our journal entry for recording the sale in some respects isn't going to change. It's still going to be accounts receivable of $2,800 because we sold them at $40 a piece, and sales of $2,800. But now we need to record our cost of goods sold and our inventory. Again, since we're under a perpetual inventory system, we do a stop and look back. And what I mean by that is when we're under a perpetual inventory system, that's supposed to be a stop sign, by the way. Yeah, there's a stop sign. We're going to do a stop and we're going to do a look back. So here's the sale. And so what units am I going to sell? Well, I'm selling 70 units. And since it's LIFO, I'm always selling the most current units first. So in this case, I'm going to sell 50 units at $18 a piece. But that doesn't get me there. I need 70. So I'm going to actually end up wiping out this entire LIFO layer. I'm then going to sell another 20 units at $20 a piece. Okay, so I believe this is 900, and if I multiply that out, that's that was not $20 a piece. That is $15 a piece. Sorry about that. So so because I messed up, let me point out again. I'm going to sell all these units, and then I'm going to look back to here, and I'm going to sell 20 of these units at $15 a piece. So that's 300. So my cost of goods sold and my credit to inventory for sale number one is $1,200. Okay, so for sale number two, again, we're going to record accounts receivable of $3,200 and sales of $3,200. Now again, how much are my costs of goods sold and how much are inventory? Okay, because it's a perpetual inventory, I'm going to do a stop and look back. So I'm going to stop here and I'm going to do a look back. And the look back is I'm going to sell the oldest units first. So I'm going to sell, I need 60 units, I need 80 units in total. So I'm going to sell all of the 35 units at $24 a piece. And that's $840. So all these are now gone. I've used them all. I now need another 45 units. So I'm going to take another 45 units out of that layer that I purchased for $20 a piece. And I believe that is 900. So I'm going to take 45 units out of here, and that's going to give me 55 units left in that layer right there. Okay, so I've used those two layers. So if I add those up, add them up together, I believe that's 1740. 1740. So those are my two journal entries for the sale. Remember, it's under perpetual LIFO. So let me do my income statement. Again, sales. I'm selling, what is 150 units at $40 a piece. That's $6,000. In this case, I have my cost of goods sold of $1,217.40. So my cost of goods sold is $29.40. And my gross profit then is $30.60. And this is all ignoring, again, this purchase number 4. Okay, my inventory at this point includes, well, I used 20 units out of here, didn't I? Yeah, I believe I used 20 units out of here. So I have 110 units left. So my inventory includes 110 units at $15 a piece, and it includes 55 units at $20 a piece. So I believe that is, let me do the math here. That's 1650, and that is 1100. So my ending inventory at this point of time is 2750. All right. Now, if I had went ahead and purchased this and included that in the transaction, well, you can see right away, because it's perpetual, I do a stop and look back. So my costs of goods sold are not going to change, because when I do my look back, these units weren't in my records or weren't in my books. So the entire additional $1,800 of purchase number 4, the 60 units at $30 a piece, purchase number 4, which was 60 units at 30, is $1,800. All of that amount is going to go right into inventory. So it's the 1,800 plus the 2,750. So if I believe that's 4,550. So again, this is without number 4, and this is with number 4. So you can see that, again, that this purchase number 4 doesn't affect anything. We're going to get there. We're going to save the best for last. So let me close this window, and let's put this summary data on our sheet right here. So that was perpetual LIFO. So my cost of goods sold under perpetual LIFO was $29.40. We'll change colors here. Was $29.40, and that was with or without number 4. Okay, my gross profit was $30.60. Okay, and my inventory without number 4 was $27.50. And my inventory with number 4 was 4,550. So you can see kind of what's going on now is that under a LIFO system, under a period of rising prices, when prices are going up, and so we're selling the most current units, our cost of goods sold is increasing. Our gross profit is decreasing. And our inventory is decreasing, because in our inventory, we're holding the oldest units or the ones at the lowest value. And what's going through our income statement is the ones with the highest value. So you can see relative LIFO versus FIFO under a period of rising prices. LIFO depresses or decreases net income. So in the next video, we're going to keep moving on, and we'll do a periodic FIFO.